Welcome to Volatility 411 for Equity Armor Investments. I'm Joe Teague. Let's jump right into it. The S&P 500 was down on the open, and we're currently up 5 handles as I'm recording this video. So we had a nice recovery off the open, and the VIX was up, with the down market. And since that recovery, the VIX has remained elevated, still at 2275. So the VIX is still up on the day in spite of the market also being up. And this goes in line with the kind of risk-off mood we've seen since the VIX bottom below 20. Now, if you go back the past 2 years, every time the VIX gets below 20 or around 20, that's been a risk-off signal. Contrarians coming in and saying the market looks complacent. It's time to put some protection on. And it's amazing this happened right at some critical levels for the S&P 500. We have that trend line, which is marking lower highs that we've seen so far in 2022. We came right up to that level. And of course, we also have the 200-day moving average, which of the S&P 500 is having a hard time getting above. So very interesting on the technical side. On the fundamental side in the market, we all are talking about the Fed and inflation, and it's really going to come down to how quickly can that inflation come, because of course everyone's predicting a recession. So if the inflation can come in quickly, the Fed can turn around and lower those interest rates and maybe make that recession not as bad, maybe get that soft landing that everyone is hoping for. On the flip side, if the recession is worse than people are anticipating, or if inflation stays higher than people are expecting, then maybe the market has more downside to come. Of course, we'll be watching how that all plays out. There's plenty of possibilities still to happen in 2023. Is this bear market finally ending, or are we just in the middle of it? For Equity Armor Investments, I'm Joe Teague.